Hi everyone, welcome to today's video. On today's video, I am going to show live investing in 6 stocks. Before we get there and I disclose the names of these 6 stocks, let me give you 3 important points. Please do not skip this because this is the conceptual part. If you don't understand this, you will not understand the type of an investor I am. You might blindly copy my strategy and it might not make sense for you. So 3 points are: number 1, I am purchasing growth stocks, not value stocks. Now, what is meant by growth stocks? Growth stocks are high beta stocks. They are slightly higher risky stock. This is a high risk, high reward equation game that we are playing. For example, if you consider banking stocks or finance stocks, these are high beta stocks. Beta means volatility, that if the market goes up, these stocks will run very, very fast. But if the market falls down, these stocks are going to crush even more. So I'm a growth investor. I mostly put my money in growth stocks. I put less money in defensive stocks, and traditionally value stocks are considered to be defensive stocks. So this is the number 1 reason. So now you might say that Akshat, you purchased something like Hindustan Unilever. So why is it that you are against value stocks right now? You need to see this in context of the market dynamics. What has happened post 2020 was that after 2020, a lot of money was printed, a lot of money flew to growth stocks. For example, stocks like Amazon, Apple, Netflix, these type of companies grew really, really fast. Now the markets contracted. They started contracting from November 2021 onwards. So as a result, growth stocks corrected a lot. So right now when we are sitting in June of 2022, growth stocks have corrected at a rapid pace. So I see growth stocks being slightly undervalued as of now. Therefore, I'm diverting my money in it. Do you need to do it? Absolutely not. This brings us to the second point, that what type of an investor I am. I am a slightly risk-oriented investor. I am fairly young. I hope that I would have 35-40 years in the stock market, so I can take little bit of risk with my money. So from that perspective, I buy slightly more aggressive stocks. So this is a very important point that you need to keep in mind, that you don't need to blindly follow me and become an aggressive investor because I'm an aggressive investor. I'm just sharing very openly whatever I'm doing. If this strategy makes sense to you, if you can borrow some practices from it, well and good. But these methods, strategies have worked for me for the last several years since I have been investing in the equity market. So I do not plan on disengaging with this style. This brings us to the third point, that Akshat, markets are falling more. Everyone is saying that recession will come, this will come, that will come, and you are purchasing more and more stock. So please watch my video from yesterday. I have spoken more about this. Please relate yesterday's videos with today's video and it will give you more sense. So this is the first key thing. Second key thing is that in the stock market, only optimist people make money. Pessimist people just keep on commenting negative things on YouTube videos. They will never invest. They will always have problem with one thing or the other. So they are not going to make money. So if you want to make money in the stock market, you have to accept the fact that your money is going to go through volatility. You put 100 rupees, next day it might go to 95. So you should be okay handling that point and you must hedge your portfolio accordingly. If there is enough interest and if this video gets 15,000 likes, I'll make a video on hedging strategy as to how I am hedging my portfolio. So with that viewpoint in mind, let us start discussing 6 stocks. Also, a very quick shout out to our sponsors for today, which is ET Money. Now, many of you might not have time to research individual stocks, keep up to date with the stock market per se. So you can consider using a product by ET Money called as ET Money Genius. They can give you regular portfolio updates of sensible stocks that you can buy as per your risk profile and portfolio. They can help you create a portfolio of well diversified, well hedged products. So you can check the links in the description box and avail a very special offer. So with that said, let me talk about 6 specific stocks that I'm buying right now. And this is me buying my first stock, which is Bajaj Finance. So let me first and foremost talk about the overview of the lending space in India right now, that why am I bullish about it and why it is a risky asset to purchase right now as well. So first and foremost point about Bajaj Finance is that it is a very high beta stock. Beta simply means that it will move very high when the markets are moving on the upward side and when there is bull run in the economy, and it will get crushed a lot. Same was exhibited during 2020 crash also, that Bajaj Finance fell a lot, and when the market started recovering, Bajaj Finance recovered a lot. So that is the basic nature of Bajaj Finance. So this is point number 1. Second key point that you must understand is the business model of Bajaj Finance. So what is it that Bajaj Finance do? It is an NBFC company. What is an NBFC? So NBFC is like a bank. It gives out loan. But in Bajaj Finance case, it mostly gives out loan to white collared workers, and they give out small loans. For example, if you want to buy like mobile phones, if you want to buy automobiles, if you want to buy fridge, TV, AC. So these are the type of loans that Bajaj Finance gives. So this brings us to point number 3, that Bajaj Finance, the industry in which it operates, it is called as credit lending industry. So what is credit? Credit simply means that if Bajaj Finance is able to procure loans, so they will borrow 1000 crore rupee, they will put it on their book and they will lend it out profitably. So on that 1000 crore rupee that they have received, they are going to make commission. Now, given the current economic dynamics, the problem is that the credit in the economy is shrinking. For example, you might have noticed that Feds have increased the interest rate, RBI is hiking the interest rate, home loan rates are increasing, etc., etc. So what exactly is happening? So what is happening is that the total amount of money in the economy is shrinking. So would this hurt a company like Bajaj Finance? 100% yes. So a firm like Bajaj Finance has taken a lot of hit also. This brings us to point number 4, which is the technicals of this stock. So if you check the technicals of the stock, Bajaj Finance has fallen by roughly 34%. So all this credit shrinking environment has caused a massive fall in a stock like Bajaj Finance. And now I'm trying to build massive positions in this stock. What is meant by massive position? It does not mean that tomorrow I'm going to sell my house and invest all my money in Bajaj Finance. No, that is not what massive investing means. Massive investing means that I'm going to probably split my money into 8-10 installments and I'm going to keep on putting more money. One installment I had put earlier a few months back, second installment I'm putting now. So similarly, I will continue to take more and more positions in this stock with time. Now, given the changing market dynamics, I might do more installments, I might do fewer installments. That's a call that I will have to make subsequently depending on the market condition. But I hope you get the picture that Bajaj Finance is a growth stock. It will grow when the market starts growing. Right now, it is available from its top at a 35% discount. Should you go and invest all your money in it? I'm not doing it, but I definitely consider it to be a good stock. Now comes the question that, okay, why do you consider Bajaj Finance to be a good stock? So this brings us to a very quick fundamental analysis. This is not a thorough analysis of one stock only. Otherwise, this video will become like a 5-hour video. So I will keep this discussion very, very brief. So there are a couple of things that I will show you. So if you take a look at the revenue growth, you will clearly see that the loan book is growing. So there is no problem there. They are able to lend out profitably also, and it is one of the most critical success stories. So now you need to get into the nitty-gritties of the stock and take a slightly more longer term view. There are a few things at play that will make the credit lending agencies or institutes more and more powerful with time. So first and foremost, India's middle class is growing. Not just middle class is growing, its income levels are rising. So right now, India's income level is at 2000 per capita GDP income. It will go to 4000. So there will be more money to be lent, so to say. Point number 2 is that majority of the people are being conditioned to borrow more and more. Have 10 credit cards, have 20 credit cards. If you're a college student, you can't afford loans, no problem. We'll give you free loans. Here is BNPL card for you. So you are seeing this, right? So this is the second key thing. Third thing is that Bajaj Finance is a very responsible company. They know how to lend profitably. They are not like random BNPL companies that are just swinging the market. They are not doing it. Bajaj Finance had been one of the most sensible lenders out there. They know how to manage risk. And my hope is, as an investor, that they would continue to display that acumen. So with that viewpoint in mind, I feel that now is the right time to start aggregating the stock. And this is my first purchase. Now the second category of stocks that I'm purchasing are HDFC Bank and Axis Bank. Now, why am I bullish about these two banks right now? So 3 specific reasons. So first and foremost reason is that these are safer growth stocks. Now, what do I mean by safer growth stocks? In very easy to understand language, it means that if Indian economy has to grow, banks have to grow. It's as simple as that, because the entire lending happens via banks. If India's top bank is not performing and growing well, then the entire economy will not grow. Opposite will happen, that if you are betting on shrinkage of India's economy, then you should not be buying banks. So from that particular perspective, banks are intricately linked. So the word of the day today is intricate. Let me know what does that mean. So banks are intricately linked to the economy. You cannot separate one from the other. Now comes the second reason that why am I bullish about HDFC Bank. So now let me show you the last 5 years return of HDFC Bank and you will get surprised. In the last 5 years, HDFC Bank has total given 57% return only. You will say that, okay, this comes out to be very high. No, it does not. It is a very, very low return for India's #1 bank. So in the last 5 years, the banking returns have been very muted. Now, if you check the technicals, you will clearly see that HDFC Bank has fallen by roughly 25% from its peak. So there is a good margin of safety as of now to aggregate something like HDFC Bank. I have already been investing in HDFC Bank at higher levels. Now I am further building up my position in HDFC Bank. Now the same is true for Axis Bank also. And if you study the fundamentals for both both HDFC and Axis Bank, you will find that there is nothing fundamentally off. So if we go to HDFC Bank, you will clearly see that the revenue numbers are hitting all-time high, profit numbers are hitting all-time high, they have no financing profit issues, no problem at all. So from that particular perspective, even prices have now corrected. So great time to enter as per my understanding. It is your prerogative whether you want to do it or not. It is not a push from my side that go and invest in HDFC Bank or go and invest in Bajaj Finance. Please be responsible for your own money. Many of you commented on my video yesterday that Akshat, please show live investing. Therefore, I am disclosing it. So I have been buying these stocks, and if the market falls further, then I will continue to aggregate more of these stocks. Now, the third stock that I am buying is Tata Consultancy Services or TCS. Now, why am I buying and what are some of the key things that I will discuss with you? So first and foremost, I do not hold any quantity of TCS as of now, and this is my first layer of investment that I'm making in this stock. So if it falls further, I am at a great position to average it down even further. So therefore, I am starting to build my position in TCS. This is the first key point. Now let me discuss three very important points regarding TCS investment. So first and foremost, according to me, this is a low risk tech stock because this is not front end tech. This is back-end tech. This is traditional tech. It is not like Shopify, Airbnb, these type of explosive tech stocks. TCS is more like a stable growth company. So this is the first key reason. So right now the market is very volatile, very difficult to invest in aggressive tech stocks. But if you take a look at TCS, it is a low risk tech. So it makes sense for me to start taking some positions. Second key thing is that the PE is getting to sensible levels for TCS. Now, what do I mean by that? So for this, let me take you to TCS's chart. So here, what you will notice is that there was a massive PE expansion and it went all the way to 41. So that was the PE. Now it has started to come down to less than 30. Right now it is trading at 29. And this, according to me, is a very sensible buying level for TCS because this was the PE consolidation zone for TCS. So now it makes sense to enter into this type of stock. Again, if we study the fundamentals, no problem with revenues, profits, bunch of other different things. So no problem per se from that angle. There are two major risks that I see with TCS right now. Number one, I'm not sure if they will be able to maintain their contracts or the volume of the contracts that they are getting. They are facing a lot of heat when it comes to workforce employment because inflation is rising. They are not able to match the salaries, all that stuff, all that hoopla is happening. But I think that information has already been absorbed into the stock. So from its top, TCS has corrected by roughly 26-27%, which is a fairly big fall for a stable company like TCS. So from that fact, TCS is coming down to sensible PE buying levels. Now, many of you might comment that Akshat, you're not a PE supporter. Why are you giving PE argument? Please folks, please listen to my previous videos. Please understand where I use PE versus not. So it is not absolutism that never use PE and you're going back on your word, nothing like that. Please understand the context of the things that have been taught earlier. I cannot make like very short videos and explain all the concepts again from scratch. It will become boring for regular viewers. So please go and check some of my other videos on PE. Now, the final point about TCS is that its long-term prospects, according to me, are not great. Why is that? I will probably make a separate video on this. This is a contrarian view. TCS is a swing trade for me. When the market goes up, stocks like TCS are going to run. They are going to stay sensible, at least in the midterm. I'm getting them at a great price right now. So, okay, I will buy it and then I will swing it and I will sell it off. So that is the perspective with which I'm buying TCS. This is not a buy and hold for 5 years type of stock for me. Now comes the fourth stock, which is Punjab National Bank and Canara Bank. Now, many of you would say that Akshat, you have been speaking positively about Punjab National Bank, Canara Bank, but unfortunately, these stocks have not given a run up. Okay, again, tying it back to HDFC Bank and Axis Bank, even they have not performed. The entire banking industry is not performing. So of course, PNB and Canara Bank are a part of banking industry. So they will also not perform. So this is point one. Second key thing, that if you take a look at the technicals of PNB, what you will notice is that it has been consolidating here with huge volumes. Who do you think is bringing these huge volumes, right? It is not people like you and me. These are like big fat investors who have already built their position in stocks like PNB. Whenever they decide to start pumping up something like PNB, anyone who has purchased it in this zone is going to make good profits. Again, is it a recommendation from my side that go and invest in PNB? No. Next point regarding PNB, am I saying that PNB is going to crush the business of HDFC Bank? No. Where am I buying, or where have I been buying PNB? I have been buying it in this zone only, right? It is just that even this fall from here to here looks quite steep, right? But if you zoom out and see the last 5-year performance, take a look from where to where it has fallen already and where did I start taking position in it. So from that particular particular perspective, it is an average stock. If it goes to decent levels, I will sell it off. I am not waiting Punjab National Bank to become the next HDFC Bank. It is not going to happen, but yes, it's again a swing stock for me. I am going to sell it off at some stage. What the duration would be, I don't know. It really depends on market dynamics. But yes, whenever the recovery in the banking sector starts, Punjab National Bank and Canara Bank are likely to give good profits. So from that perspective, I'm investing in PNB. Now comes fifth stock, which is V-Guard Industry. I'm quite bullish about the business. I think they are running the business well. There is no fundamental problem with the stock. Again, can be seen by sales numbers. It has been going up. Profits have been going up, no fundamental problem there. Second key point is that there has been a massive beat down of mid cap and small cap stocks even before the November 2021 onward crisis. So the current crisis actually emanated in November 2021 and the markets have been falling generally. But even before that, mid cap and small cap stocks were taking heavy beating. So from that perspective, if you check the size of V-Guard, you will see that hey, it falls in like mid cap, small cap category. It has taken a lot of beating. There is no problem. ROCE is also good. Revenue is good. Sales good. It is able to handle the downturn or this downturn quite effectively. Why? Because its debt to equity ratio is very, very sensible. It has not taken a lot of debt. It is not a high debt company. When will the stock start moving? I don't know. I cannot comment on that. But the bottom line is that the price right now is deeply undervalued compared to the fundamentals of the stock. That is my perspective on it. Again, not a buying selling advice. If you are purchasing this stock, please discuss with your friends or your financial advisor if you have one. Do further research and then only purchase. I'm just simply telling you whatever I'm doing in the market. Next point regarding the V-Guard industry is that if you take a look how much the stock has fallen by, so it has fallen by 27-28% from its peak, which is not bad at all given the thrashing the small cap and mid cap stocks have undergone. So compared to them, V-Guard has done fairly well. So again, from that particular perspective, it's a sensible stock. Now, last point regarding V-Guard industry is that it is likely to grow further because there will be a lot of product innovation that is likely to happen in this space. Why am I talking about that? Because there have been a lot of power, electricity related challenges that have popped up in the economy, and companies like V-Guard will undertake innovation at least in the Indian market and will try to build on that. So from that particular perspective, I feel that companies like V-Guard are going to do fairly well in the next bull run. Now comes the sixth and final asset in which I'm investing, and here is me making a live investment in Bitcoin, and it is Bitcoin. Now I know that I'm going to get a lot of heat regarding, hey, why are you purchasing Bitcoin? It is a fake currency, this, that. Okay, everyone is entitled to invest the way they like. This is not a push from my end that go and invest, go don't invest, etc., etc. I am a Bitcoin believer. I am a believer in good cryptocurrencies, and according to me, Bitcoin is a very good asset to own. Therefore, I'm investing more, and here is me making a live investment. Very quick 2-minute commentary on why am I buying Bitcoin. Point number one is that I see fundamental value in it. Now, I will not repeat what fundamental value is. I have made several videos regarding Bitcoin and I will link some in the description box so you can check it out in case you feel that that asset is sensible for you. Number 2 point, critics have been saying that, you know what, Bitcoin is going to die. They have been clamoring about it for the last 13 years. Bitcoin has not been dead. Third key point, people keep on saying that, you know what, Bitcoin lost like 65% of its value from its top, this, that. How can an asset lose like 65% of its value? So this is the most important point, that compare it to Amazon in 2000 early days. So when .com bubble burst, Amazon was trading at roughly $4.5, $5. It came down to $0.37. So it lost 90-95% of its value. Why did Amazon lose a lot of value back in the day? In early 2000s, simply because of the fact that e-commerce was a maturing technology. Something similar is happening in the Bitcoin / cryptocurrency / blockchain space, that this technology itself is new. So there is nothing fundamentally off from that perspective, at least in my understanding. Again, not a push. If you want to invest, invest. If you don't want to invest, don't invest. But in case you are a beginner, please consider taking little positions in it. It's a growth asset, it's a volatile asset, and it is likely to be volatile. So from that particular perspective, this was a very honest take. I'm putting my money where my mouth is. I'm not just simply saying that, you know what, I buy every day, this, that. I'm showing you live investments also. And if there is enough support and people take these type of videos sensibly, where you're not making me responsible what happens with the market tomorrow, I will continue to make such videos. Thank you so much for watching. Please like and subscribe, and I will see you the next time.